Stock market volatility looks like it's going to be around for a little while longer, especially as President Donald Trump keeps turning up the heat on tariffs on trading partners. So, amid this volatility, two of the companies that are going to feel the increasing heat are Robinhood Markets and Coinbase Global. Investors looking at these two as potential buying opportunities could be an interesting situation. I'm going to compare these two across several important categories, including revenue growth, cash flow from operations, and returns on investor capital. I'm also going to share with you my proprietary discounted cash flow models I've created for Robinhood and Coinbase so we can see what are the fair values of these businesses based on my calculations. I'll also look at valuation on a forward price to earnings basis. I'll bring that all together and answer which one I think is the better stock to buy for long-term investors.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So let's start with comparing these two on revenue growth. And we can see from their chart of the last 3 years, and it's interesting that these last 3 years include two different variations in the stock market. First, if we go back to the early part of this chart in 2022, you can see they both experienced significant revenue decreases. In fact, Coinbase experienced a quarter in January of 2023 where revenue fell by 80% year over year. Now that's interesting because you fast forward to the most recent quarter and Coinbase revenue growth was 143% year over year. And those are two different market situations, right? In the most recently completed quarter for Coinbase, it was a time of great enthusiasm. When President Trump first got elected, there was a great boom in cryptocurrency markets with anticipation of the coming benefits they will experience. Now, further into the presidency, there is some concerns about those growth prospects. Regardless, you can see the big difference, right, in market enthusiasm and how it reflects into revenue growth for Coinbase. That's also true, but less increasingly so for Robinhood, because Robinhood customers trade stocks and cryptocurrencies, not just cryptocurrencies. The volatility is less severe for Robinhood, although it is still there. They are both going to experience declining customer acquisition, declining customer engagement, declining customer assets under management as a result of these market volatilities. It's going to be bad news for Robinhood and Coinbase, probably more so for Coinbase than for Robinhood. Now, the other interesting thing I've noticed from these two is the increasing profitability from Coinbase. Following those declines it experienced in late 2022, the company made good decisions to cut staff, cut costs as a result of the new reality. And they've kept those cost cuts and cost controls in place. And so when revenue has grown, it's led to significant increases in profitability. Their cash flow from operations over the trailing 12-month period was a whopping 39%, while Robinhood had experienced benefits, and then there's been volatility, right? You don't see that clear upward trend with Robinhood like you do with Coinbase, but Robinhood also had made great improvements in their cost structure coming out of those boom days following the meme stock frenzy during the pandemic when so many individuals were trading GameStop and AMC stock on the Robinhood platform. Now, looking at returns on investor capital, we see an upward trend for both Robinhood and Coinbase. Coinbase at 21%, Robinhood at 11%. But more impressively is that solid upward trend from each of these two companies. They have, over the longer term, gained millions of new customers, increased engagement with existing customers, and have shown a ability to capture the younger market where some of the more established trading firms have had a harder time attracting those customers. Now, you can argue whether the gamification of the stock market is good for the long run, But in the near term, it's definitely been good for Robinhood and Coinbase as they've attracted millions of customers and they've increased engagement from those customers. And they're doing so in a way that's increasing their profitability. Now, looking at valuation, my proprietary discounted cash flow model has Robinhood stock at an intrinsic value per share of $18, which compares unfavorably to the current market price of $41 per share. That's despite the fact that I forecasted its free cash flows rising from 1.5 billion in 2025 all the way up over 2 billion by 2023. Similarly, my discounted cash flow model for Coinbase has its intrinsic value at $112 per share, and the current market price is $172 per share. So when looking at these two on the discounted cash flow basis, they both look overvalued. However, when I measure these two on the forward price to earnings, they look undervalued. Coinbase trading at a forward PE of 21 looks cheap based on its prospects, the way it's growing active users, the way it's increasing its return on investor capital. It looks cheap at a forward PE of 21, and similarly for Robinhood at 23 with their growth prospects. Still, if I had to pick one of these two companies to buy right now, I would pick Coinbase as the better stock to buy. Regardless, each of these are going to experience a lot of volatility. So I think what would be prudent is to add these two on your watch list and then wait for a really bad day in the market where these shares fall considerably to start allocating to these companies. Hey everyone, I'm excited to announce a brand new private Discord for our channel members at the VIP Discord level. It's a great place to connect with me directly, engage with like-minded investors, and learn more and take your investing to the next level. Spots are limited, so join now before it's too late.